So now we will compare the answers. Was there any difference here in this question? Any catch was there? What was the catch? Nothing. Okay, we'll see. There are cash generating units. This is an impairment to be tested. So they have given you ABC's book value. The operations are from HO, and HO assets are 200, 150 and research center. Okay, the breakup they have given you. Relative cash generation, the relative carrying amount of the CGU are reasonable indication that headquarter building devoted to each cash generating unit. The research they cannot allocate. Same like X and Y was there, why they could not allocate. And they have given you the remaining useful life, same 10, 20, 20. The headquarter assets are depreciated on a straight line. Recoverable amount also they have given you, and company as a whole they have given. And this time they said the research center generate, okay, is it matching M as a whole? 199 plus 164 plus 271, 634. No, they have given one note there. It's not matching. But individually, if you add, the research center generate additional future cash flows for the enterprise as a whole. That's why it's not matching. If you see here, if you add these three, it is not going to match here. So they are telling research center gives you cash flow. Therefore, the sum of value is not matching total. Additional cash flows are not attributable to the headquarters. Now calculate and show allocation of the impairment cost. Ignore the taxation effects. Okay, so if they give you the tax percentage, then probably you may have to do the deferred tax. Now first thing is corporate allocates. We'll write the theory that headquarters amount can be allocated, research cannot be allocated. So we have to check at the impairment, and this is called a top-down test. There are two types of tests which is not discussed in your CA final, but at the intermediate level impairment you must have come across bottom-up test and top-down test. Bottom-up test means you start from the asset. No. You make one CGU. No. CGU, group of CGUs. Like from the bottom you go to the company as a whole. Top-down test means you take the company as a whole, find out the impairment, allocate to the CGU. Again you take this, allocate to the sub-assets. Like this you go to the bottom. Okay, anyhow, this is for your academic interest, not this thing. And we have used the weight basis. See, weight is something like this, students. See, there could have been different ways of doing it. Now, why I should go for a weighted? See, first of all, we are using these assets for certain period of time. This is, if I consider this is like a price, this is like a quantity. We have been always using it based on the price basis. But see, understand, the life of this will get exhausted 10 years, but these people have to continue 10 more years. So when you talk about a cash generation, this asset will continue for 20 years. Will you allocate the head office asset worth 10 years? No. That means you should consider their life also. So how do you do it? Normally, what is the weighted average? When you have got a price and quantity, you multiply it. That's exactly they have done here. Alternatively, see, different ways are there, but this is the standard practice of weighted average. Somebody could have told me 100 divided by 10. I will follow EAC. EAC method means equivalent annual cost. In capital budgeting, you have got this concept. Because when multiple assets are there with a different life, you find out the equivalent annual cost by dividing the present value factors and all. That is one practice. But that type of practice we cannot do it here. Like finding out 100 divided by 10 book value per year, meaningless. Means it is not an acceptable practice. But if this one, no, it is a general acceptable practice. You multiply the quantity with the price and find out the weight. So did you get this 183848? So you get the impairment only for B and C. And distribute 1956-75 in this particular ratio. No mistakes up to here. Then finally you allocate, next step is to allocate. For headquarters, 2 allocations are going to happen, 12 and 1, so total 13, 30 and 3. The last step is to find out the CGU as a whole. So if you get the carrying amount 650, you have charged impairment at a CGU level 46, 604 is the carrying amount. However, recoverable amount is more. That's why that research center will not be impact. So you got this number, this is my control number 604. Yes, so we will move on to the next question. This question came in your examination. Okay, again it's the same story. So students, yes, you can pause the video and we can discuss that. We can compare that later. Yes, so this is also done. We'll check specific question. Okay, only they said train, railway station and all. But I think the question is fairly same there. There is no change. Company as a whole and calculate impairment loss. Ignore the decimals. Now, you will say that, okay, certain things can be impaired, certain things can be allocated, certain things cannot be allocated. Even though you are not have told, fine, because the verb used is calculate. So you need not go and explain that. If it is a determine, yes, this was required. Now, weights will be calculated 15 by 126, 45 by 126, 66 by 126. And the impairment cost comes 198 and 36. Did you get this number? Yes, then we will see what went wrong. Did you get the existing? Okay, how many CGUs were there? 3. 4 CGUs, no, 3 CGU. No. Land is not a CGU, no. Land is a common asset. Train, RS and RT. Now, did you allocate this land 1800 and it got 206? Okay, then we will go back. What went wrong? What is the carrying amount of the train? This is correct. And on what basis did you allocate? Whose? Mine. Okay, sure. So one more thing, one small thing. I just go back now. Yeah, I think this number came wrong, right? This was the wrong number. What you got? Now, just I will show you, because again, because of this practice only, otherwise if you have simply done, or again I wonder why somebody didn't bring me this point to my notice earlier, thinking that it's just a round off number, because I always say no, round off ignore. No, we cannot ignore that. Okay, so I'll show you. See, if you go back to the question, very specifically they said ignore decimals. Now when they say ignore decimals, they expect us to ignore decimals in every workings, in every output. Somewhere in between, if we see, again, we may do it, but it's the luck, whether they give or don't give. But if we follow the instruction, the chances, see again, life and exam works on the probability basis, that we have to accept it. Both are uncertain. We have to accept it. A luck plays a very important role. That also we have to accept it. Followed, no? Yeah. So now what we need to focus is just trying to increase our probability. Because there is nothing certainty. If I do this, it's going to happen. No. But if I do this, the probability will increase. That is possible. Understand this. That I was just thinking today morning. Whatever I am doing, I don't know. I am putting my efforts from past 6 years. Nothing definitely will give me success. But every single effort increases the probability. Followed? So now again, you may wonder, so many things they set trap, this thing, what I should keep in mind? Learn it. No. This is one new learning for you. You may miss this subject despite knowing, okay, it's the same ditto question of the study material. No problem. No, somewhere else you try. But if we do selective studies there, okay, we don't do these certain things. Our objective is to attempt 100 marks. So that if I take something, some blunders happen here, there, still my probability is very high. Okay, so what is the importance you have seen just now? Okay, then I'll show you now how they have done that at different levels. So what they expect me here, which we used to take straight away, because in none of the questions they said round off, ignore decimals. Let me see in study material, sorry. No, no, let us go to the study material. Ignore study decimal. See, in the study material also they have told. And then I'll show, okay, in the study material question also they have told, ignore decimal. I will show you now. Okay, now let us see what they have done. Okay, so what they expect, I will round off. And you say, sir, where is the hint for me? How they can do it in the examination straight away? No, they are not done in the examination. I'll move further. Okay, so like this, 198 and 36 we got. See, this is what they have done in the suggested answer. 15 by 12, 126. It comes to 11 point something. They have made it full 12%. Now, if I go to the, then how would my previous question tallied? Now, exact round, like they 12.5 is taken full. In RTP when this question came, ignore decimal was not there. So, sorry, in 14th question also, this is an inconsistency because they said ignore decimals, where in RTP, no, where in 14th question, you look in, not 14th question, you look into the 15th question. You look into the 15th, I am talking, this is 15th question. This is question number 15. They say ignore taxation, not ignore decimals. Here they didn't ignore the decimals, they have taken full decimals. Now I will go to the examination and question number 14. Both the places they said ignore decimal. But the problem is, when in the examination, 1600 divided by 5000, it comes exactly 32%. There is no headache. That means somebody by mistake, they really ignored decimals. Still they would have got correctly. Understood? In the first exam, when they see again, when the first of all, only 5 to 10% of the questions will repeat in the exam. A highly probable question, it will repeat. No, the moment it repeats, the probability is substantially down to 5 to 10%. Again, this question will not come. If it has come again, that means there is one fitting somewhere else. When they give you this question for the first time, in the study material, ignore decimal was there. Exam also they gave, but they showed mercy on the students. They set the numbers in such a way that even though, that's what I said, no, even though you have ignored one, it would have set right. They gave the same question again. This is the study material question. If you see this 500 divided by 4.2, this will be something 11 point something. This question came in your second examination, this train and lorry example. Now you understand. Now, will they give you a mark? What do you think? No. Why? You ignored the decimals. Now, whom to go? Will they tell you there? No, this student has ignored decimal, that is why 0. Will they tell? No. We get wonder. Why they didn't give me mark? Suggested answer is also not available in my hand to compare now. Already fight and all happened, no? Otherwise, previously at least suggested answer was there. Even though they tell that this is not really the marking scheme. Suggested answer I could have seen and tried to make sense of what went wrong. But there is, I'm telling you, something like this would have gone wrong somewhere else, which they will not tell me expressly. Anybody would have got this 0, no? Why? They said, look, I told my instructions very clearly, you ignored it. If you want to go and see in the test your knowledge, there also I rounded it off with the same instruction. As an auditor, look for details, because a devil may lie in a detail. People say, no, devil lies in the detail. So have an observation, keenly look into it. Again, luck factor plays. Maybe this they have set it right, another they have set in my favor. Followed, no? So when you prepare, just focus on preparation, not on the result. Result has got a lot many factors, students, and the biggest factor is the grace of God, which is not within your control. So when you sit for preparation, just focus on preparation, which is within your control. Why? Because the thoughts, you can focus, you can bring your thoughts back. That's your choice. If you're not focusing, it's your choice again. Nice. Very nice learning for me also. That yes, I should be going forward, be very careful, looking for the details. Okay, now going forward, did you get this 152? No. 154? No. 28? No. And but everybody would have got the same answer. Then somebody will come, tell what is this ICA is doing. See, everybody got a correct answer. You also feel when somebody says, anyhow. So last is again the final story is same. Maybe they may give you 1 mark for giving comment on this. Okay, at this level, since you said there is no impairment at a company level as a whole, because they really don't want to give 0, they may give you 1 mark for this. Anyhow, clear? Yes. Yeah, good that we did it as a homework, and I am wondering why till now nobody brought to my knowledge now like this. Every time I used to give, okay, take it as a homework. Maybe people must have been ignoring it. See, the moment you ignore, you lose the learning. Okay. Yes, with this we have done with the impairment of the CGU. So CGU impairment is covered. Now we will move on to the reversal of the impairment, which is another very important aspect. But a simple thing, it's the same continuation. Now, what is reversal of the impairment? Just like your revaluation, you do revaluation from time to time. It says that the moment you impair, see, first of all, when you impair, when you check your recoverable value, when you check your recoverable value, for what? See, you should tell that. If anybody asks you when do you check impairment, you say when there are indicators, internal or external indicators, except 3. Goodwill, indefinite life. Which asset with indefinite life? Intangible assets with indefinite life. An intangible asset which is not yet ready for use. Which one? Intangible asset work in progress. Okay, we will apply this in Ind AS 38, this concept. So now, once you impair, then from that time every year you need to check whether you need a reversal. See, understand here, understand the difference. Impairment you need to test only if there is an indicator. But the moment you impair, from that time every year you have to compulsorily reassess, should I need to reverse? But if it is a mere passage of time, is not a reason for reversal. Simply time has passed and you say, oh sir, my values are more today, recoverable values more. No, there should be really change in the business circumstances. However, when you reverse the impairment, goodwill impairment cannot be reversed. So once goodwill is gone forever. Why? Because if you reverse the impairment of the goodwill, no, it sounds like internally generated goodwill, which is prohibited by Ind AS 38. Now increase, but when you increase the carrying amount, you understand this is what a speciality of reversal of impairment. The reversal shall not exceed the carrying amount had if no impairment recognized in the earlier year. See, first of all, you will reverse the you have impaired. Because of the impairment, you start charging depreciation lower. Okay, I'll give you an example here only. Your cost was 100. You started impairment of 20. Book value became 80. Going forward, you charge lower amount of depreciation. Now at the end of the year, 70 and 90 is the book value. If you would not have done impairment, it was 90. So how much, suppose if there is a indicator that there is a good improvement in the business performance, can you reverse this full 20? No. Because if you reverse this full 20, your book value after reversal is going to become 92, which if you do not have impaired on day 1, it would have been 90 today. That means you are reversing this depreciation also. I call it would be book value. Because which book value? Book value is not there on picture only, no. The moment you impair it, this goes into out of picture now, out of books now. Once you impair, which book value comes into picture? Impaired book value comes into picture. That's why standard says, say, for simplicity's sake, I will call it would be. Would be means if I would not have impaired, what would have been my book value, which is not there in the books, which is outside the books. So I have to restrict my reversal up to that amount. So how much maximum I can reverse? 18. So I need one working note to calculate that reversal amount. The amount of reversal should be restricted to 18 so that the book value should not be more than what would have been if there was no impairment. So book value before impairment 90, 72. Thus, this is my format, okay? This is my format. So I will calculate up to here. Now I need to calculate how much I need to reverse. So I will have one working note. I say my book value before reversal is 72. What should be my new book value, which is lower of would be carrying amount, which is a separate calculation, versus new recoverable amount. Because possibly my recoverable amount is less than would be carrying amount, no? Otherwise life would have been very easy here. Just compare would be carrying amount and say reversal. No, reversal should be lower of would be carrying amount and recoverable amount at that time of impairment reversal. Are you clear about this concept? Low, see, now imagine, yeah, very good. You should understand the logic, huh? Simple, otherwise you will not understand the way how we work out the problem. Suppose, for example, if I say on this day, you reverse the impairment, your book value is 72. On this day, we had got fair value 170, 150, would be carrying amount 90. Which one you will consider? 90 you will consider. And say maximum 18 can be reversed. By reversing 18, 72 plus 18, how much you get? 90. Can you come, this is what now? Book value. What is my recoverable amount on this day? Yeah, good. My carrying amount cannot exceed recoverable amount, no, at any point of time. So this is okay. I'll take you another scenario now. You see here. Scenario number 2, suppose my recoverable value is 80. I said whichever is lower. Which one? Chalo, you didn't consider that whichever lower. You went to this story only and say 18 should be reversed. By reversing 18, how much you got? 72 plus 18, you got new book value 90. What is my, this is book value. What is my recoverable amount? 80, no? Immediately again you impair, no? That's what, no, what's the point? That's why you do it and again you impair. That's why here only you compare whichever is lower. If you don't want to do that, okay, if you say, I'm getting confused. Would be carrying amount. You recover. That's what I'll take, whichever is lower, no? Any point of time, you compare afterwards. See, at any point of time, your book value at that point of time should be less than recoverable amount. Simple. So if you say, sir, no, this equation is confusing, then do one thing. Just compare with the would be carrying amount. And once you get that, then you compare with the recoverable amount. And if there is an impairment, again charge impairment. Rather than reduce your reversal to the extent of lower of 2, no. Reduce your reversal to the extent of lower of 2, finish. You don't have any more headache. Otherwise, again you have to test for impairment. Understood? Very clear? Yes. We cannot reverse more than 18. It's an upward revaluation. No? If you can't do, if you want to do it, no, do it. Okay, why? Your fair value is more, right? Take it to the revaluation surplus, because this will hit your P&L account. No, when you debited it as hit your P&L account, and reversal is also going to hit your P&L account. So if you want more than that effect, no, that means you want to value at a fair value, do it. Change your method from cost to revaluation model, and that excess amount take it to revaluation surplus. No problem, that surplus will be there in the revaluation, no. Account full fitting given. You can't simply play and get any accounting effect there with the reversal, impairment. I will reverse that to the extent what would have been if impairment was not there, and subject to impairment again at that time. Would be value is 90, but what if my recoverable amount is 80? That means additional I am going to charge. So I will restrict my reversal to the lower of these two, and this, considering this, gives the impairment effect now. Considering this gives me the effect of reversals. So I am trying to club both the things together by telling lower. If you don't want, first you do this, figure out the reversal and test for impairment again. Perfect? Yes, so we will do the problems now. You understand how the examination problems will come, and there is more focus, look into small minute details. Yes, it's the question number 17. Take out question number 17. A Limited purchased a machinery for 100 crore on 1st of April 2011. The machinery has got a life, adopt SLM. Information has been given on 31st March 2012. So 12/13. Okay, that means they have given you the future cash flows. Discount rate is given. We know, okay, that the value in use is 75.31. Okay, anyhow, we will not do this working. You can note, you can use the space. Now, fair value less cost to sell on 31st March is 70 crores. Now, have they given me the book value? No, they have given me the cost and they have told me the life and all the stories, so I can always calculate. Now, calculate the impairment loss on 31st March 2012. Yes, please tell me. Leave some space. Write value in use is equal to 75.31. Anyhow, this you can do now. Now, why they, I think they have done this in continuation, because this question is connected to the next question. Say question number 17 and 18 are interconnected. Followed, no? Sorry? 1 minute. Okay, there is a continuation, no? As on 31st March 2013, there is no change in the estimated future cash flows. Okay, if you see here, the cash flow remained 30, 40, 10. Cash flow remained 30, 40, 10. They only gave you the present value factor and value in use they have given you. Advice, see, previously the question in the old syllabus was, how should it be dealt under Ind AS 36? But this says, please advise how it should be dealt in Ind AS 36. Do you expect a theory? Should we write theory? Yes, this is a theory question. Is there any reversal of impairment? No. Why? Definitely, if you calculate, your value recoverable amount would have been more now, indicating you have to reverse it. But problem, if you see the cash flow is exactly same as what anticipated earlier. Then why did you get the impairment first? Because of the time value of money, discounting factor. That's why in the theory you have to tell that if reversal is simply happening, or increasing the recoverable amount is happening simply because of the passage of time, there is no reversal of impairment should be done. Only this number should have been changed. Then you should have given that effect. Followed, no? Yes, right. First working note number 1. Value in use, calculation of value in use. Okay, write the heading here, cash flow, discount at 10%, present value cash flow. Okay, just write the heading, this you can do it later. Here 1, 2, 3, 4 and write the total here 75.31. Okay, so this is my calculation, which we have done so many times, it's not a big deal. Next, calculation of impairment. I was also wondering, how come this question I gave here in between? Only one calculation of impairment. There is nothing. No, I didn't see. No, it was in one slide. It was the continuation was in the next slide. So I thought this must be connected to probably next question. Okay, what is the book value? 80. How did you get? 100 minus 100 by 5 into 1. 80. 1 year depreciation. Rupees in crore. Minus recoverable amount, which is higher of, what is your fair value? 70. Value in use? 75.31. So you have got 75.31. So you got 4.69 as the impairment. Now in the examination, when this question comes, they see this second time that 67.84 they calculated and gave. Will this feed you in the exam? They may not feed you. Understand? That means that table what they have prepared, no, 67.84, they may not give you, or they may simply give you the cash flows. So again, you may have to do one more working note in the exam if they don't give you. Working note 2, value in use as on 31st March 2013, which comes to 67.84, which they gave you in the question. If at all they don't give you, you may have to work it out. Okay, so now I don't need this. What I'll do? What is my next heading? Calculation of impairment loss on 31/3/2013. Next, we calculated impairment loss on 31st March 2012. Now I am in the end of the second year. First year and we calculated. What is my book value? What is the book value? Please tell me the number, I will note. 60, 75.31, okay, 60. When is the book value? As on? See, Baba, this is such a simple, sorry, 56.48, any other number, Baba? See, you can't miss here. 66.94. I need a book value, Baba, on 31/3/2013. And I don't expect anybody to make any mistake here. It is a very plain, very simple thing I am asking. 51.7. So many numbers. So 2 people purchased this. 3 people purchased this number. What is your number? 55.31. Everybody 1, but 3 people are purchasing this. What you are purchasing? What do you want? Yeah, please tell me, Baba, how much? Which one you buy? So 56, one more customer. Nice, no? Okay, how did you get? See, what is your book value after impairment? 75.31 minus how many depreciation unit charge? 4 years depreciation on how many year depreciation? 1 year depreciation. See, be careful. They may simply increase that by 2 years. See, all this plug and play. It's a very simple question. It's a very simple means such a plain question. But plug and this, they can increase, they may remove that cash flow, they may increase this 1 year into 2 years. So my depreciation will be 75.31 divided by 4. How much it comes to? 56.48, no? How did you get different numbers? What mistakes happened? Divided by? No, sir. From what? No, impairment should have been reduced before, no? Because before that 80 was the book value. By 80 you deduct 4.69, you get 75.31. Again, no problem. See, not one simple thing, how it can get missed. Simple things are difficult to crack. I'm not telling, Steve Jobs is telling. Complex things are easy. Yes, what other mistakes? Okay, so first thing, you take 56.48 minus what is your recoverable value, which is higher of fair value 40, value in use 67.484. So impairment loss is nil. So when you calculated impairment loss, second year impairment loss resulted into 0, but you suddenly realized that your recoverable amount is more than your carrying amount. Then you will test for reversal. Means not test for reversal, you want to reverse what you charged 4 point whatever. To what extent? Lower of would be carrying amount or recoverable amount on this day. If everything was fine, this amount you would have compared with the would be carrying amount. Lower of that would have been your new carrying amount. This minus existing carrying amount would have been the reversal. But the problem is this value in use is increased because of the time value. So write note. This is what you need to write. Note. Are you clear? As per Ind AS 36, impairment loss is not reversed just due to passage of time. There should be sufficient substantive evidence for me to prove that really my asset started to earn better. Thus, rupees 4.69 shall not be reversed. This is your advice. This is not a calculation question. And to do this, give this advice, you need certain numbers. Simply in air you cannot talk, no. You need to have a base. And what you have done is all the calculations which is required for your advice, or note you can say, or advice you can say. Because then they specifically use the word called advice. Yes. Yeah, discount rate may change. We will take that year's discount rate. See again, impairment is done for what? Discounting factor of assets cash earning capacity. What is understood? What is the main thing here? What I am looking for? Assets cash earning capacity. So you should look, the discount rate may change. Okay, time may pass. And why discount rate will change? Time is passing. Market condition, then okay, then my cash flows would have changed, no? Okay, that cases, see, it is very rare that interest rates in the market have changed and your FD cash flow remains same. That's what I am trying to tell you. Both when your market conditions change, definitely your cash also would have changed. Here, market remains stagnant. Time change, discount also stagnant, but the discounting effect will change because the further the cash flows, present value is small, AFM principle. But as I reach there, the same cash flow which was very small, insignificant, suddenly has become big. What for? Nothing. My market is same, but I reached, my time has passed. So what you are asking me that discount will change, no? Yes, that's very hypothetical that such type of questions will not come. Yeah, but good. You think about it, you will get a better perspective. So are you clear about this? Yes, but yeah, there's nice mistakes on the, what is that called, book value calculation. Understand your mistakes, note your mistakes. A Limited purchased an asset for 100 lakhs. It has got a 4 years with no residual value. Recoverable amount they have given you 60, 40, 28. Calculate the amount of impairment loss or its reversal, if any, on 31st March 2011, 12, 13. How should I do it? Every year I should do impairment test. At that time only I'll come to know, no. Without that, how do I know whether should I reverse or not? So first thing I start with what? Calculation of impairment for 31st March 2011. Do I need to do any prior working notes? Not required, because first of all they said use the word called calculate here. Book value 1st April, only 1 year depreciation, I can do the calculation there only. Straight away recoverable amount is given, not even value in use. Then value in use I should have done one working note. See, this by looking at the question, it should form a map, should come in your mind. Okay, this way I am going to solve it. Follow, no? So start calculation of impairment loss on when 31st March 2011. Perfect. See, question, yeah, maybe if you don't find time, I can recommend that, like in a tabular format, no? Because I really don't know, maybe you can try to do that in a tabular format. Because somewhere, not this, IC has done in your Ind AS 19, one tabular way of journal entry or something. One place they have done. That's what I always suggest. Go with what they have done, give the top priority, and not no hard and fast rule. If you want to do it, do it. But should be out of the risk zone by that time. Okay, first, what is my book value? 75. How did you get? 100 minus 100 by 4. Less recoverable amount 60. So you have got impairment loss of 15. Now I will go to the calculation of impairment loss for 31st March 2012. If you do tabular form, probably you may face this problem. How do you write the book value of 31st March 2012? Yeah, you can give it a try. You can practice it that way. You see whether that format suits you. Again, I will start with the book value. What is my book value? Now, if I start, what is my book value on 31st March 2011? This is my impairment test on 31st March 2012. So, first I should start with the opening book value. Now, what is my book value? 60. Yes. Because I already impaired it. Understood? No, this is the mistake. Minus depreciation. How much is my depreciation for 1 year? 20, 60 by 3. So I have got 40. What is my nicely framed question? What is your recoverable amount? 40. So nil. That means no impairment also, no reversal also. Where is the to reverse? That's what no nicely framed question. Your recovery amount is exactly equal to this. If the reversal is going to come when your recoverable amount is crossing the book value on this day. Here you, if you look what is would be carrying amount would have been very low now. As compared to that, you say, sir, there is a reversal. Followed, no? Impairment, don't touch that second year. Say 10, 50. Again, I need to do that working. Lower of would be carrying amount and recoverable amount, whichever is low, is the new book value. Difference between new book value and the old book value is the reversal amount. We'll do that in the next step. Have you understood this? And you suggest students, if any better formats comes, no, please tell me. I'll definitely incorporate in your name. And the third one, impairment loss on 31st March 2013. Now, what is your book value? 40. Less. What is your depreciation? 20, because only 2 years are left. 20. Now you look at the recoverable amount. How much is recoverable amount? 28. That means this is now subject to reversal. But less, you write, since you are going to reversal. Okay, okay, you can write the heading impairment loss bar reversal. Because if impairment loss is there, you will calculate impairment. If reversal is there, you will calculate the reversal amount. I will do a working like this. And you suggest if you have got a better format. Now, revised book value. I got this actual book value. Since I immediately realized that recoverable amount is more than the impairment book value, there is a reversal. But how much is the reversal amount? So either I use this format to calculate impairment, or I will use this format to calculate the reversals. Then see, previously I used to write actual with the recoverable amount, which is higher off. This time I will write, since there is a reversal going to get activated, actual minus revised book value, which is lower off. Have you understood? Which is lower of what? Would be carrying amount. How much would have been my would be carrying amount? Would be book value. If I had not have done impairment on day 1, that first year, today instead of 20, what would have been its book value? 25. How? 100 minus 25 was the book value in depreciation every year. So 75, 25. Have you understood? Versus what is use recoverable amount? 28. Which was the amount you should reverse? 25. If you say if this was low, you would have taken that. So that impairment reverse also get addressed. So what I am going to reverse is 5. Have you understood this format? Should be simple. See, it's not a conservative thing. Here what we are saying, we will reverse that. But how much? To the extent of my would be carrying amount subject to new recoverable amount. Because if my new amount would have been 20 and you say, sir, I will reverse 5, then immediately again you have to charge 1, because after reversing 5, your new book value becomes 25. So book value is more than recoverable amount. Again 5 you have to charge impairment. Followed, no? That's why you always keep the lower of this. See, if this itself was 20, book value also 20, you would have said there is no reversal only. That means the reversal, reversal and the new impairment on 31st March 2014 or whatever, you subsume it. You will mix together. Otherwise, there is no fun. No, you reverse impairment on the credit side and debit impairment this year again. You net it off both and do this. That's why I use this format. You get the actual book value. First time reversal, it is the higher of fair value this. Here, how much is the reversal, and ultimately what I am going to get, impairment cost or impairment reversal. You understood my format? No doubts, no? Because this part is very confusing part. Huh? This is that's why just keep in mind, you will either calculate impairment at the bottom or you will calculate impairment reversal. And for this, what all working notes you require, you do it first. Here it was very straightforward, would be carrying amount. Recover amount they already gave you. What if they would not have given you? You may have to calculate. That's why this format should be there in your mind. If they ask me reversal, write the heading impairment cost bar reversal. And I will come to know just by looking at this amount with the recoverable amount, then immediately change this and to say revised carrying amount. Yeah, because this recoverable amount got changed, no? It's just because of the time. If you see, I showed you the same cash flows, no? In this question, what was my recoverable amount on 31st March 2012? 40. What is that on next year? 28. So, have they told you how it is 40, how it is 28? Breakup they didn't give you. They told you the present value, recoverable amount they told. Previously they gave me value in use. And value in use was not changing only, no. When you say recoverable amount, this could have been a fair value also, no. In the previous question, they specifically told me value in use, which didn't change. If you see that year's cash flow and the next year's cash flow, it was exactly same. Then maybe, then how, see, how it's possible, Baba? Your fair value and value in use are interconnected, no? If your asset is not earning anything, why somebody on earth will pay you premium for that? Only when its capacity is going to earn, somebody will pay more. Otherwise, your fair value, you should make an assumption that fair value also remains stagnant when your cash flows are stagnant. That's called business acumen. This is what you will get tested during interview. Business acumen means, do you look at this as only as a number to solve the problem, or you do understand the business behind it? That's what you should make an assumption. This will happen, this happens. Yes, are you clear? Good, very nice. I love this discussion. Okay, so impairment loss reversal is 5. Okay, because next all questions you should only do, no. That's why I'm explaining full ji jaan laga ke, so that I will reduce my effort. Yeah, understood. If you are upward revaluation, then see, first of all, this amount would have been at a revalued amount only. Okay, that's what I am trying to tell you. Reversal and all will not have much impact there, because when you talk about only cost and the recoverable amount, there will be a big impact. Because if it would have been revalued, amount would have come. We don't have any problems here. A revaluation with the revaluation model with the impairment reversal. But again, then I would have done one more what is that called? Revaluation I would have done. And again, see, understand, revaluation when you do, it is not that every year you have to do it. Revaluation is generally done once in 3 years. So it's not required that today impairment reversal has happened. I will continue with the previous revaluation book value. No? That's what I will. You remember, that's why in decommissioning liability, we discussed it. If you follow cost model, if you follow revaluation model, when there is a decrease in the decommissioning liability, okay. Now what accounting and when there is an increase in the decommissioning liability, if you follow cost model, what accounting entry you pass? PPE account debit to decommissioning liability. In 16, when there is a cost model is followed and there is an increase in the decommissioning liability, because you initially thought something, later it got changed. If you would have followed revaluation model, what accounting entry would have passed? To decommissioning liability, debit what? Revaluation surplus. This is the reason, because somebody can contradict this, somebody can challenge this by doing revaluation, telling, look sir, my recoverable amounts are more, I will do revaluation now. Do it if you want, take to revaluation surplus there. That's what I told you some time back. If you want to really contradict this and upward or increase the value, do it. But the difference between 25 and 28, you should take to OCI. No problem, no. That's what you say, this is relevant for me. That's the policy, your policy choice, no. But that difference, I will not permit you to bring it to P&L. See, for me, P&L is very auspicious, because based on that, so many people will take decisions there. Balance sheet is fine. Balance sheet, they look into the ratios and all. Looking at your asset, I don't know which decision, but looking at the P&L is like a result, no? Result of your efforts. People look at that, not your assets. Somebody may have a beautiful asset, but what they look for ultimately, the results. Follow? That's the P&L. We should. If you see all these standards, what they are trying to do, this is what they are trying to do, no? P&L effect should not come. Okay, we'll proceed further. Note, since recoverable amount is greater than the carrying amount, impairment loss shall be reversed. However, so why did you do this last exercise, lower of this? However, such a reversal shall not exceed. In fact, after this you should do that working. Here we are doing this note first and then we are giving this note. Rather than beautiful way of presentation is first you explain this and then do that reversal calculation. No problem, doesn't matter. Shall not exceed the amount that would have been determined. This is what I call would be carrying amount had no impairment earlier. Whatever you want to do it, reverse it, but you restrict it to the would be carrying amount. Are you clear? Yes. So we'll proceed further. This is a nice question, illustration question. On 1st of April 2011, Venus acquired 100% of Saturn for 4 lakh. The fair value of the identifiable assets is 3 lakh 20 and the goodwill is 80. Perfect. Yeah, you are 103 will come. You feel that okay, this is 103 question now. Now Saturn is in the coal mining business, then you will wonder why they have given this and government cancelled the license. 103 never ever license cancellation and all we came into picture. Oh, maybe this is impairment because this is an indicator. This can be an audit question also. Simply, the moment you see this, impairment should strike to you. Government cancel. As a result, Saturn's revenue estimated to get reduced by 30%. The adverse change in the marketplace and regulatory condition is an indicator of impairment, which they told you very nicely in the study material. As a result, the Venus had to estimate the recoverable amount of goodwill and net assets as on 31st March 2013 because on this day your asset got impaired. So acquisition happened on 1st April 2011, 12-13, 2 years finished. Now Venus uses SLM basis of depreciation, life of assets, all assets. So net assets, let us make it. Generally net assets doesn't go like that. You have got inventory, cash and all. Simplicity's sake, they said it has got a 20 years life, all net assets. How much is your net assets? 3,20,000. Thus you can argue me, sir, what 3,20,000 may have debtors also, no? Will you depreciate debtors also? No. Here for simplicity's sake, they have assumed that net assets is made up of only PP. With no residual value, independent cash flows can be identified to any individual assets. You cannot identify. So the entire operation of Saturn is to be treated as CGU. Oh, all net asset itself is one CGU because none of the individual asset can earn cash flow on its own. And due to regulatory entangle, it is not possible to determine the selling price of Saturn. So its value in use is estimated to be 2,12,000. What did you understood by now? So what is my recoverable amount? Same. We did one small problem there. So if the fair value is not there, leave it. Now suppose by 31st March 2015, after 2 more years, the government is going to reinstate the license of Saturn. Yes, again an indicator that there is a reversal. The management expects a favorable change in the cash flow. Very good, because the changes are not because of your time value of money. It's because of your change in the cash flows. And this indicates that the impairment loss may be reversed. So straight away you know that when you do it for 2015, you write the heading impairment to be reversed. The recoverable amount is re-estimated on that day. The value in use used to be 3,04,000 and this time they gave you fair value because there is no mining ban has been lifted. It's 2,90,000. Calculate the impairment loss and advise the accounting treatment of reversal of impairment loss and subsequent depreciation of thereon. How many questions? 3 questions. 3 questions. See, that is the first thing you should understand. Where they will fix one and be careful. Okay, so first we have to calculate the impairment. When the day mining ban happened, so write impairment loss and allocation. On 31st March 2013. Now what is your historic cost of asset? 3,20,000 net assets, because entire CGU is or book value or cost of the net assets. How many years depreciation I need to charge? 2 years, less depreciation for 2 years. How much? 3,20,000 divided by 20 into 2. So you get 32,000. Instead of adding book value, just add it here, plus should you need to allocate the goodwill? Goodwill is there, no, here. Should you not allocate the goodwill? Yes. Goodwill. Now, which method of valuation we have done for goodwill? 100%. So that's why we don't have any problem. Otherwise, same question. If they say 80-20, then you have to see which goodwill method I have valued. If it is full goodwill method, you write 80,000. Same question. If it's full goodwill method, you write whatever goodwill comes, you write there. If at all it is partial goodwill method, you follow some technique or process called grossing up. You will increase that amount of the goodwill notionally. Accounting entry is 80, but you will write here 90. I'll come to that. This is called a grossing up. Okay. In this problem, you don't have any problem. Why? Because NCI is not there. That's what after reversal, this is what I'm going to teach you, how to do that gross up. So since the goodwill came now with this calculation, because previously what happened, goodwill was there, but we didn't know whether it's a full goodwill or partial goodwill. So I kept quiet. So goodwill you allocate, how much came now book value? 3,68,000 minus recoverable amount. What is my recoverable amount? You need not write higher of, because the fair value is not that, value in use only, 2,12,000. So first step, you calculated the impairment 1,56,000. Are you clear? Okay, I have done it in the outer column. I'll change this format. Other two columns are not required, because let us keep it very simple. Now, what is the second question? Advise the accounting treatment. How should I account now impairment loss? You should allocate it first to account it. And grossing up is not applicable here. Okay, right? Allocation. First, it should be allocated to goodwill. Balance for other assets of CGU. First you give to goodwill. So if you remember, we have done similar working there. We'll write the heading called goodwill, other assets. What is your book value? 80,000. 2,88,000. How did you get 2,88,000? 3,20,000 minus first year depreciation. Minus, how much is the impairment? How much you will allocate to goodwill? Full 80. You will consume this fully, and 76,000 you are going to give this, and after impairment goodwill is 0, and 2,12,000 is the other assets. Your accounting entry will be impairment expense account debit to goodwill. other assets of the CGU. Now we need to talk about the reversal. Okay, so this is clear, allocation is clear, and this is the carrying amount after impairment, revised new book value, right? Reversal. They said there is a clear indicator of a reversal. Impairment on goodwill cannot be reversed. Once you impair the goodwill, even though you have got a prosperous, beautiful, exceptional cash flows, you can never ever reverse the goodwill. However, for other assets, increased book value after reversal shall not cross, I will write simply here, would be carrying amount. Don't write in exam would be carrying amount. I am writing for your understanding sake here. Have you understood how to write this advice? You say that impairment cannot be reversed, but other assets, yes, definitely you will reverse. But you will restrict that reversal to the amount. Okay, your examination language will be like this. You will restrict to the carrying amount had no impairment loss recognized previous year, like just like previous question what we have written. Yes. Now, do we know what is the amount? Would be carrying amount? I could have done this working there only in the total working, or I can have one working note 1, calculation of would be book value, which in the previous question there only we did 100 minus 75. If you don't find time, you do it there only. So, what is your historic cost? 3,20,000 minus depreciation, how much? If I would not have charged the impairment, can you tell me one amount here? If I had not have done impairment, how much would have been amount? Sure? Everyone? Very good. 64,000. 32 divided by 3,20,000 divided by 20 into 4 years. So, you keep this 2,56,000 in one hand. What is your recoverable amount? Working note 2, recoverable amount. See what happened? No, why I am doing right now as a working note? If you want, you can do it there also, because they asked you to calculate there. It would have been so big there, because lower of would be amount or higher of fair value or value in use. If I do in one working, you have got actual book value, it should be compared with the revised book value. And what is your revised book value? Lower of would be carrying amount or recoverable amount. And what is your recoverable amount? Higher of value in use or fair value. So, you should not get confused. That's why I am doing these two workings here, so that straight away I will put that, plot that numbers. No, sir, I am confident, do it there. So, sorry? That's what I told you, no? There are two items, no? One is 80 goodwill, 3,20,000 impairment. I killed that goodwill, gone. So, when you talk about the reversal, I will look only other assets. No, gone means gone forever. That's why, because it becomes an internal generated goodwill. So, recoverable amount is what? Higher of, what is your fair value? Higher of, what is your fair value? 2,90,000, or what is your value in use? 3,04,000 is equal to 3,04,000. So, you are going to compare these two numbers and say whichever is lower. No confusion, you can do it there only. I will show you. I have done it there. Here in this calculation, I just calculated would be carrying amount. Only thing is you need to have that clear clarity. Which numbers, which format, what you need to do. That's it. Now let me go to the last step. Impairment loss reversal. Calculation of impairment reversal. So what is my book value on 31st March 2013? Can anyone tell me? Others? What is my book value on 31st March 2013? Yes, Prithvi. Here. Everyone okay? 2,12,000. Very good. Minus depreciation for how many years? 2 years. How much is my depreciation? How much is my depreciation? Amount? 550. 23,550. Any other number? $21,200. Okay, I want to write and I want to see who is going to buy what. 21,200. Okay, two people. That's what. That's this question. Otherwise, they will give you simply for 10 marks, 8 marks. You have to do it very accurately and you need to have that clarity. And you see, after I solve that, you challenge me, sir, no, sir, your method is wrong here. I said, you also agree what we are doing is correct. But at this point of time, you don't have that clarity. That's why some confusion comes. 11,770. I don't want, 26,500. What I am asking, first of all? I only forgot now. What I am asking? For how many years? 2 years. Okay. To calculate depreciation from when 2013 to 2014, from 15, 2 years. What is my book value, opening book value? 2,12,000. This book value is going to live for how many more years? 18 years. Into 2. How much I am going to get? Wait. 2,12,000 divided by 18. Okay. Into 2. 23,555. Yes, very good. I don't know what other numbers are. Divided by 20. Mistake. 2 years will go or no? 16. Okay, 2 years. Okay. Now here what you do? They have rounded it off. Be careful. They said 24. No, feel happy. Feel happy. Right? Please write 24 because they have rounded it off to 24. Yes, full ignore decimals here in this solution. They have told here also. No, not told. No, in the solution they have done. Just keep in mind that they have done someplace. Please make a note there. They may ask you this. So depreciation also you may have to round it off. No. See, I always tell you from the beginning, 5% of the RTP, MTP study material questions you trust, 95%. But when it comes to examination, 95% of the question you trust. And 95% of the answer you trust. 5% yesterday happened, no, that 21-22 revenue they were asked. Next 22-23. Print mistake in the examination question. They may say rounding off to the nearest thousands. You don't know. That's why these are all the indicators. And tomorrow they will tell, if you go and argue, no, please open and that test your knowledge question and see, have I not rounded it off? And there is nobody to argue. That is a big problem. Institute is an idea which doesn't exist independently without us. We make institute, humans. Okay. So you understood? 1,88,000. This to reverse, I am going to have less revised book value. What I will write in back? Lower. revised book value should be lower of, what is my would be book value? 2,56,000, which otherwise you should have done one small calculation here in the bracket. And recoverable amount, what is that? Higher of, otherwise higher of would have come here. 3,04,000. You can give a reference of working note number 1, working note number 2. Followed, no? So you have got 2,56,000. So 68,000 becomes the reversal of the impairment. Have you understood? I hope now it should be very clear to you. And see here, I have not done it as a separate working note. This is what I wanted to tell you. Because this you may get confused, because here you say lower of this, here you say higher of this. Damn sure your mind is very clear to it. Do this straight away. Look, have they told you compute or calculate? Because if if they say compute, even though you are damn clear, do one working note and write the final figure with the reference to the working note. Because you cannot tell, sir, it is that figure is here only here. They will not value it when they use the word called a compute. Understood? Yes. Now write impairment reversal. Rupees 68,000, where you will recognize in P&L as on 250. The book value is restated at what value? 2,56,000. Therefore, revised depreciation charge, the last question, don't miss that. After you solve any question in the examination, go back to the question, read it again, so that 1 mark what you are going to get, no? Because we feel that, oh, reversal is done, move to the next question. Wait, this was small 1 mark question. Revised depreciation. How much is my revised depreciation? Okay, how do you, okay, 17? 667. Dhanashree, something I heard 16,000 you telling. No, you told something, I heard. Okay, how many people, any number? 16, 16, 16, 16. Yes, now only question, Shruti, where did you get this number? Yes, it is 16,000 because you have to divide it by 16 years. Understood? See, 1 mark. Just, if we know this, there were 2 things we may miss it. One, we forgot, because we thought impairment reversal. The moment reversal is done, you move to the next question there. Gone, 1 mark is gone. Now you know this, you make some numbering mistake. That means your attention at that time somewhere goes here, there, gone. Score, no. And you see, FR is its play. Done? Clear? Everyone is clear? Every number, the flow of which we did, the way what we have done? Yes. So we will move on to the next question, which is an MTP question, RTP question. Yeah, I think you are much eager now, correct now, to solve it yourself. Yes. So please pause the video and try to do it yourself, or don't refer the previous question. If you want, when you want to do this, don't refer, just do it. And observe here one more thing. I have told earlier also, I just remind you, in every study material question they give the date like 20x1, which is irritating. But in every examination and MTP question, you get the dates like this, proper dates, which is very easy to understand. Yes, so please do it. Yes, Sean. So it's an easy question, right? No twist, no catch. Seems to be simple. Yes, again, I don't want to read this. They asked you to calculation and allocation of 2016 loss. So we have to do that, allocate to the goodwill part. Reversal of impairment, and again it's allocation with the theory. Allocation is the theory here of 2018. So first you start with the calculation of the loss. Historical cost 4,000, depreciation you charged for 4 years, book value you got, added goodwill, carrying amount with the goodwill. So impairment loss is 2213. Is there any mistakes here? Perfect? Everyone perfect? Yes. I can proceed further. Then you have to talk about the impairment. So how much you will give to impairment? Full amount you will give to impairment, goodwill. And the balance 213 you will give to other assets. Yes. By this you scored half of the marks. Yes, I'll proceed further. Then they speak about the reversal. So first you need to say goodwill I cannot reverse, and you should not exceed the carrying amount of the would be carrying amount. So because of this you calculate, since you said here it cannot exceed the would be carrying amount, we need one working note for the would be carrying amount, which comes to 2400 as on 2018. Anything? Any mistake? Okay, so I don't know, I have not seen the question. Is there a mistake here? 4000 divided by, maybe from the previous slide it has come. Okay, just a minute. It should be 15 is correct. Okay, this is correct, right? Output is correct. Okay, maybe copy from the previous slide. It must have come there. Now last is the impairment loss reversal. Since I don't need to have a second working note for recoverable amount. In fact, you can do it later. Straight away they have given you. Or sometimes you may have to calculate. This is what they do. So reversal comes to 175. Did you get this number? Very beautiful, no? Perfect. That means you have understood. There's no confusion for you. Otherwise, you would have made one or the other mistake, the recoverable amount. So many information they'll give you, carrying amount, book value, reversal of the book value, would be carrying amount. If you can swim through all those numbers, whatever is given, and exactly tell, look sir, this should be the reversal. Yes, perfect. Your learnings are done. I hope nobody has made any mistakes. Nothing. In fact, I wanted anyhow. So have you written allocation? Mistakes happen, no? Have they not told me in the question? If you see, go to the previous question, they didn't speak about allocation. They say how do you account, some theory they asked you. See, they will ask you in different ways, students, understanding. Simply lost, no? No, who have not written? Written? Okay, those who have not written, they lose the marks. That's why, see, look at, again my suggestion, go back to the question, see, have you answered whatever they have asked? It doesn't take you much time, it just takes 1 minute for you. Okay, so you say that it will be treated as an income in the statement of P&L account, goodwill cannot be reversed, entire amount I am going to allocate to the assets. Am I going to calculate revised depreciation here? No, why? They didn't ask me. Previous, they asked me, 1 mark I want. That's it. Mark this question, very important. Very nice, beautiful question. Have I written NSB or something? NSB I have not written. NSB means new syllabus. It is not test your knowledge or only RTP question. Test your knowledge question, no? Okay. Now understand, Elia Limited is a manufacturing company which deals into manufacturing of cold drinks. With this, we are done with the reversal questions. And is having a various plants across India. There is a machinery A in Baroda plant, which is used for the purpose of bottling. It's a beverage company, no? Coca-Cola or what knows what it is. There is one more machinery called machinery B, which is clubbed with the machinery A. That means without, see, first of all, machinery A can operate independently. Now there is machinery B, which cannot operate independently unless it works with A. Understood this? Machinery A can individually have an output and also sold independently in the open market. However, you cannot sold in isolation without clubbing with machinery A, as it cannot produce an output as well. Now the company considers this group of assets as a CGU, who A and B, and along with the inventory amounting to 2 lakhs and goodwill amounting to 1.5 lakhs included in the CGU. There's some good inventories lying there. That is also part of the CGU. CGU means everything, no? I told you, I have got the pen. Is it my part of the CGU? Is it to impair the fan? Should I consider the markers? Yes, because marker I use in the board to explain the concepts to you. So the fan you cannot treat unless marker is also you should be treating. That's why I will include inventory also. Understood the logic, no? Why you have to include inventory here in the CGU? Plus 1.5 goodwill allocated to the CGU. Okay. So now I am very clear that my CGU is made up of what? A, B, inventory and goodwill. Machinery A was purchased on 1st of April for 10 lakhs. Its residual value was 50,000. B was purchased after 2 years with 5 lakhs with zero residual value. The useful life of both the machinery is 10 years. But when you come today, if you talk today's day, I don't know whichever day, machinery A will be 2 years older than machinery B. The company expects the following cash flows in next 5 years pertaining to A because A can earn independently and incremental borrowing rate is 10%. So they have told you cash flows from year 1, 2, 3, 4, 5. Now which year we are into today? God, okay, here they told something. 2013, 15 and today is 31st March 2018. How many years over for machinery A? 5 years over. For machinery B, 3 years over. Professional valuers estimated that the current market value of A is 7 lakhs and the valuation fees is 1 lakh. What is this? Cost to sell. There is a need to dismantle the machinery before delivering. What is this? Cost to sell. Dismantling cost is 1.5 and packing cost is 25,000. Legal fees would be 75,000. Okay, is this cost to sell? 1 lakh. Is it a cost to sell? Can you avoid it? No. How can you say cost to sell? How? See, when you say cost to sell, these are all the costs exclusively. It's like contract acquisition cost. See, you have to fair value it. Okay? Fair valuation fees has to be paid. It is not your cost to sell. You can sell it without doing fair valuation also, no? Is it required that you have to first value it there? You give an open offer. You call for one bid. You don't have any idea of what is your product worth for. You call for a bid, no? When the customer's quote, that itself is my fair value. Alternatively, I will call one valuer and ask him, tell me the worth. And then I will set my minimum price. Below this, nobody can quote. Valuation expense. Don't consider in your impairment calculation. New learning for you. Only other 3 things will become cost to sell. Followed? Understood the logic now? Same, that's what legal fees here maybe to have that stamp paper. If you sell, you will incur this. This is your assumption here. See, legal fees can take 2 forms. No? One is vetting of the document before the contract is going to happen. Like customer comes to you, you are the banker. I'll give my documents to you. You give to your lawyer to check whether documents are proper. Will you pay to him? Yes. Whether I will take the loan or not, you have to pay this legal fees to that lawyer. Second scenario, you decide to grant a loan to me. I will come with certain terms and conditions and say, sir, if you give me loan, you give me with these terms and conditions. What you will do now? Now it is you are going to give me, and as to vet that you will again go to the lawyer. Yeah, that you will incur only if you incur this contract. No, if you decide I will not give the loan, you will not incur that cost. So inventory has been valued as per Ind AS 2, and the recoverable amount of CGU is 10 lakhs on 31st March 2018. Which one? CGU, not A. What is the recoverable amount of A? Recoverable amount of A on 31st March 2018. Have they told you? We have to calculate using these 2 pieces of information. The question is very lengthy, but actually what they said here, they said value in use, they said fair value, take recoverable amount, book values are already there individually, Now again on 31st March, they said Indian values are as per this thing, CGU's fair value is so much. In the next year, the company has done the assessment of the recoverability of the CGU and found that the value of the CGU is 11 from 10 to 11. The recoverable amount of A is 4.5 and combined A and B is 7,60,000. CGU's value of such a CGU is 11 lakhs. Recoverable value of A is A 4,50,000 and machine A and B is 7,60,000. Okay, now there is one confusion. What is this? The company has done the accessibility and recoverability of the CGU and found the value of such CGU is 11 lakhs. What is this? How did you get 11? Yeah, we will check this, what this number is all about. 11 lakhs is used to decide whether there is a reversal or not. Simply, for a confusion's sake, 7,60,000 is used to determine the actual reversal amount. Just like first we calculate the impairment at CGU level, we need to find out the reversal also at the CGU levels. Okay, we will do this. I will tell you, I will explain this, what it is for. Okay, this is not a cost to sell that we discussed. Now, what you are supposed to calculate? Compute the impairment loss of CGU and carrying value of each CGU after charging impairment loss for 31st March 2018 by providing all relevant working notes. See, this compute itself says you have to provide the working notes. They didn't say calculate. They say compute. That itself we have understood. That means you have to give working notes. Now compute the prospective depreciation for the year 18-19 on the above assets and compute the carrying value of the CGU after reversals, because there is an indicator that there is a reversal. Yes, so first thing, what I am supposed to do here, please help me. What did you understood with this question? Yes, please. Company has no, that is called a bottom. If you are looking, see, always it is top up approach, where you start at the asset level. Is this fan impaired? Is this fan independently earning? No. Then you go for the CGU. Okay. Now something you cannot allocate, but you know that it's earning cash. Then you go for the CGU or group of CGUs. If group of CGUs is also not possible, like you see ABC. Research center you could not allocate to ABC also. Then you went to the company as a whole. And at a company as a whole, you calculate the impairment, start allocating it, and from there CGUs, again start allocating it. First you consume the goodwill, and again you go to the, it is called a top-down approach. Reversal also happens in the same way. Only thing is, you always give the note, no? What is the note you give? Reversal of the goodwill is not going to happen. Other than everything is the same. If there are two impairment, two CGUs, you distribute to the two CGUs. And then in that CGU, again it will go to the asset level. Because ultimately, you have to pass an accounting entry at asset level, no? You cannot say impairment cost account debit to CGU, meaningless accounting entry. Which asset in CGU? That's why if you can identify specifically in that CGU, first you do impairment at that level, at a lower level. This is what I am trying to tell you. So first here you have got one CGU. In this CGU, you have got A, B, inventory and goodwill. Is there a small item where you can specifically test for impairment? Which one? A. Do it. And at a CGU level, if you get, first again take that, first you give the goodwill, whatever comes to the CGU level. Then balance when you have to distribute to other assets, no? If that any asset has got specific impairment, first you give to that. Like we have calculated. Like I could have calculated on fan separately. So since I know fan is there, first give to fan whatever maximum impairment you can give. Then you distribute on other assets on a reasonable basis. Have you understood this logic? Yes. So first assumed management intends to replace the machine at the end of the life. Why? We will discuss one theory. You remember there was last one flow chart. which I told I'll explain during the theory, you need to assume that impairment, because otherwise you have to carry at a fair value. Okay, now we will have got two items. Calculation of the book value on 31st March 2018, because they said compute. In that computation only you cannot say, sir, it is there. What I need to do, I have to compute book, I have to compute impairment. What all the items will come there? Only two items should come. Book value should be there, recoverable amount should be there. But to arrive at these two numbers, what all in between item, if it is subject to calculation, that I should have done before. So this particular thing generally I would have done in the calculation only, impairment calculation only, historic cost minus depreciation, book value. No, first you calculate the historic cost. What is your historic cost? $10 lakhs, 5 lakhs, minus how much is your depreciation as on the date of impairment? How much is your depreciation as on the date of impairment for A? Sorry? Question is clear? Yes, Prithvi. Question is clear? You have got a historic cost the day you purchased it. At some point of time you are trying to test for impairment. So you wanted a book value on that day. What is the depreciation I would have charged from the time I acquired it till the date of the impairment? Yes, here, front row. Yes, Priti, what happened? Any confusion? I can see some confusion. 4,75,000. Understood. Now how? You got 10 minus 0.5. Scrap is there, divided by 10 years into 5 years. Similarly, how much it comes for this machine B? 5 minus 0 divided by 10 years into 3 years, 1.5. Yes, so you got this. And we did it as a working note 1 because I wanted this number after calculation. Yes. Which way we are? They said it will not earn cash now on its own. Don't I want the CGO's book value? Sir, why we are taking 10 years? Life is 10 years now of that machine. Who said? Last 2 years, that's why you assume that the management intends to replace machine A at the end of its useful life, so that 2 more years you can use this. Okay. That's that assumption. Very good. I thought this assumption is related to that next concept. That's why, otherwise, yeah, your observation is very correct, because if it's this, since you cannot use this B independently, the moment machine A ends, you should end B also. So you should take literally 8 years. You have to consume this machine for 8 years. So you make an assumption, since the question is very silent, that the management is going to replace this A at the end of its useful life, so that you can take full for 10 years. Maybe in the examination they say that management has got no intention to replace the machinery at the end of 10th year. Suddenly you should come here and say 8 years. Because after 2 years, that asset is a scrap for you. You cannot earn any cash, because to earn that I need machine A. Machine A has finished. So what to do with the machine B? You abandon it. Why? If you want to use it, you have to buy one more machine A. Will you do that? Will you do that? If your answer is yes, that's what we are given an assumption. So that 2 more years you can use it. And this method of depreciation, so if you don't have the possibility of using it, I said 8 years. This method of depreciation is called accelerated depreciation. Have we discussed it anywhere? Where? Ind AS 16, hauling charges. I said we cannot make a provision for this. What I can do is I can charge high amount of depreciation. Very nice. Good. Okay, are you clear? Yes, working note number 2. Please suggest students, what should I do? Just think at the end. You need one computation of the goodwill impairment. For this, do you need to calculate goodwill? The CG is made up of 4 items. Do you have the book value of the A, B, goodwill, inventory? Yes. So you have got that first value. You compare it with what? Recoverable amount. Do you have the recoverable amount of that? They have given no recoverable amount of the CGU. That means CGU's impairment I can do with the first working note. But why they have given me all this individual? That means when it comes to allocation, I may need the impairment of A. So, do I have the book value of A? Yes. Do I have the value in use of A? No. So, working note U is the value in use of A. Followed, no? Right, year. How many years? 5. 1, 2, 3, 4, 5. Cash flows, they have told you last year 1 lakh plus 50. Discount factor at 10%. And PVCF right at the bottom 4,89,650. Just write this skeleton. Later you can fill it up. Fifth year cash flow will be? Yeah, 1 lakh. They said excluding residual value. What is your residual value? I have included, no? 1,50,000. Yeah, I told you. You should include with residual value. See the smartness there. They excluded here and luckily they told you. Otherwise you should have made an assumption there. Is it included or not? You should have been worried. Maybe they may remove in the exam. Then you go with the study material assumption. In the study material they excluded here. So I will take that. Followed, no? See, this should strike to you. What if they don't give you in the exam that excluded? You have to make an assumption. Yes, what should I do next? Fair value. So write calculation of the fair value less cost to dispose. Fair value is how much? 7 lakh. They have told you. Minus, will I take that valuation fees? No. But should I should give note. When you don't take, please make a habit of giving a note. Simply don't ignore that. Dismantling cost 1,50,000. Will I take packing? Yes. Legal? Yes. I am assuming this to be part of the sale. Like legal fees to be paid to for effecting this contract. Valuation is a sunk cost, no? It's not a cost to sell. Because I don't incur it to sell it. I incur it to find the fair value. But these costs I am going to incur only if I decided to sell. Like one customer comes and we finalize the sale contract, then I incur in dismantling, packing and fees. These legal fees may be toll fees, taxations, God knows. No. Legal fees mean don't think that only lawyers' fees. It can be anything, any fees related to the law. Why you are thinking that it is legal fees means lawyer fees and get confused with that 115? It can be any. Value in use of 2000? No, they said year 1, 2, 3, 4, 5, no. The company expects following cash flows in the next years, next 5 years. They said very clearly, 5 years you have already finished. You purchased this in 2013. In 2018, 5 years you have already finished. And the next 5 years, life is also next 5 years only, no. No, where? This is on 31st March 2018, no. to take because I have to test impairment today now. And I am not required that I have to sell right now. I have to just see if I am going to sell right now. What is my cost? Yes, Shruti, what is your doubt? See, first of all, I will go back. When I have to supposed to test impairment, tell me that date. 31st March 18, correct? Now, when did I purchase this A? 2013. 5 year finished, I calculated my book value. And what cash flows they have given you here, they are for the next 5 years. Just before that, you review the sentence. Ah, 2018. Because this 1 year is 2019, 2020, 21, 22. Arey Baba, 5 year life is already over. So how many more life it can earn? 5 more years. That means from 2018, next 5 years. We are on 2018 now. Very nice, because I didn't know that even, see, institute can do, this is the way, generally they give the year. This is which year? Tell me. 31st March I will write. 2000 what? 19. Every single question, they used to give you the year. So that I know that this is from next year. This is 2020, 21, 22, 23. See, 5 year life is over. Will they? Okay. You look here, no. You look at this. The company expect. The word expect itself says that it is not actual. Cash flow for next 5 years. Oh, very good. Yeah. That interpretation is also there. Means on day one only they are anticipating next 5 years. Yeah. Wait. Yeah. Very nice. See, I am looking for a perception. Huh? Because how somebody will look at this question in the examination hall. Perfect. Your perception is very correct. Let us see. Yeah. Understood. Your question is very valid. So you have purchased on 2013 and asset is purchased on 2015. The useful life of both is 10 years. Company expects the following cash flows in the next 5 years pertaining to machine A. Yeah, obviously I would have started thinking that from 2013 onwards it's life 5 years. Very nice. The incremental borrowing rate is 10% and 2019 to 15, okay, 2013 to 2018 they have given me. Now this is on 31st March 2018. Now I see on one place there is one information gap. Another place very clearly they have told it is 31st March 2018 fair value. Now tell me students, what makes sense to you? Assuming this 2013 to 18 makes sense to you or 2019 to 2023 makes sense to you? Yeah, this can be. Maybe in the examination if they remove this. I told you, no, they may remove it to test you. Now tell me, at this point of time when you see this date, that means on this day they have given you fair value, which makes sense to you that this value in use is of this or this. If I was there, I would have taken this, because otherwise they should have given me on (2013). They should have given me. Then I would say yes. If they would have given me this on 2013, yes, I would have considered this, because when I have discounted to the present value, I get on 1st April or 31st March 2013. Both are comparable. Which one? No. This here problem starts. Question is beautifully framed such a way that the life is exactly 10 years, out of which 5 years is finished. If at all 6-4, this discussion would not have happened. That's why you should understand, no? They apply their mind while framing the question. Yes, that's why, see, the high possibility that in exam also somebody may pursue this type of question. Oh, it is the first year. What you should do? You got confused. Look at other information. Try to make an assumption there. Yeah, very clearly it is an assumption there. But this must be pertaining, because they didn't tell very specifically this cash flow is first 5 years or next 5 years. If you take first 5 years, you get stuck. That we have not done anywhere, and that we cannot do also. Next 5 years present value I'll find out. No, they have to tell you the fair value. In any of the questions, we never calculated the fair value. Followed, no? Anyhow, understood. Very nice. Nice observation. Nice, different way of perception. You see, no, one problem people will perceive, because I also didn't observe this fact. Yeah, somebody could have done this. Then I realized that exactly 5 they have given. But for that machine B, they didn't do this. They have given after 2 years. So now clear? Perfect. So you have written this to 4,89,000. Okay, next fair value less disposal. I think this also you have done, right? And you given the note that the valuation fees is not cost to sell. Now I will calculate impairment cost of A, which is a working note 4. Why? Because in the question they didn't ask me that. They asked me impairment cost of the CGU. So working note number 4. And why did I do? For the allocation sake. Working note number 4, impairment of CGU. What is my book value? Sorry. Of A on 31st March 2018. What is my book value? Book value of A? 5,25,000. What is my recoverable amount, which is higher of value in use 4,89,650, fair value 4,50,000. 4,89,650. So I get 35,350. So I'll keep it aside. I'll keep it with me now. And to do this, 2 more workings I had to do. These 2 things are coming from working note number 1 and working note number 2. Whatever, 2 or 3. And this itself is 1 working note. Yes. Now write the heading impairment cost of the CGU. What is machinery's A's book value on the date of impairment of CGU? 5,25,000. Machine B, 3,50,000. Inventory, 2 lakhs. Did you allocate goodwill? 1,50,000. So what is the total book value of the CGU as a whole? 12,25,000. Have they given you recoverable amount? Yes, 10 lakhs. Now you calculate the impairment of the goodwill, impairment loss of the CGU, which is 2,25,000. What did they ask you the question? Calculate the compute impairment cost and carrying amount after charging impairment loss. That means allocation. I don't know. See, I definitely hope that they will draft one question paper sufficient for 3 hours for a well-practiced student. Sometimes what happens, this thing look very lengthy. They have got one choice, leave it. I told you, 5-mark question, they will ask you for 10 marks, danger. 10-mark question, they will ask you for 5 marks, that is also danger. Don't journal entry, sit and write there. They want to make you donkey job there. Sit and write all the 5-year journal entries. Strategies are there, different strategies. You should outsmart ICA. That's it. Okay, so allocation, right? Allocation, because they asked you 2 questions there. Allocation and revised WDV. See, always I follow this format where I will write. See, always allocation I do this, right? Previously also I have done it. So I have got a goodwill A B and stock. Because they asked me revised carrying amount. So what is my book value before impairment? 1,50,000, 5,25,000, 350, which is already there with me. Now tell me, students, less when I do impairment, which is 2,25,000, whom I am going to allocate? First full 1,50,000 I will take. Then whom I will allocate? Balance I should allocate to. Will I give anything to stock? No. Stock is always stated at a recoverable amount, cost or NRV, whichever is low. They only said no, it is valued as per Ind AS 2. Ind AS 2 means cost or NRV, whichever is low. There is no impairment there. Now whom I should allocate? A and B. On what basis? If the question was silent, if A was even not a CGU, like independent cash generator, you would have distributed 525:35 ratio. But at a CGU level, since already you have calculated impairment, why you are inventing some new? That is required when you don't have any other basis. So why don't you give 35,350 to A, which you have already calculated in working note number 3, and give balance 39,650 to them rather than simply on the book value, because you have got a better basis, acceptable basis to allocate now rather than the previous one. If this was not there, we have done already. How to allocate the impairment, we know. Based on the book value, 5:5.25 is to 3.5. This ratio we used to have distributed. 5,25,000 is to 3,50,000. Is only A out of balance. How much is the balance? 2,25,000 minus 1,50,000. You got a balance. Out of that 35,350 you straight away give to A. How? Working note number 3. Balance you give to machine B. Between who and who? No, since you know that this is the maximum amount is already earned, why you want to again impair the A? Because when they are earning cash, okay, if you want to impair A, then reverse the impairment. Because the moment you impair it, its book value is less than its recoverable amount. Should you not reverse? If you allocate further out of this to A, its book value will be less than recoverable amount. Yeah, reverse the impairment. So it makes no sense, no. Impair it and reverse it. That's why if you give it only that much, how much it is got impaired at the individual level. A will be replaced. No, this says A will be replaced for their machinery B. Then you would have only considered 8 years for this. This book value would have been different. Depreciation would be high. Amount of allocation will be, because this is always the balancing figure. So this book value would have been less, impairment cost would have been more, it would have landed up here. Followed, no? B, all. Sorry? Independent, yeah. This is dependent, no. That's why we allocated. We could have independently calculated here. So I have got a better basis. Otherwise, it's like an HO, no? HO and this thing. I have always distribute based on the. Okay, write one note. First, allocate to goodwill. Since A is independent, allocate rupees 35,350 to A. No allocation for stock, as it is valued as per Ind AS 2. And the fourth, balance to machine B. See, what you have explained here is what you have done there. Yes, first part of the question. if that was the case, you would have restricted book value of the machine less than. So then you would have restricted it to 0. First you would have consumed B fully, and then you would have decided like what to do. That means there is no more impairment loss at the CGU level. Because then you see, is there any liability for me? No. Then you ignore it. Because max to max, you can impair only up to the value of the asset. Again, that goes with the like facts and circumstances of the case. I have to apply my mind. See, first I am in a management. I know the fair has got impaired. Right? See, ultimately it is my responsibility to present true and fair financial statement. No? To fool around, I can do something like I can take it here, that CGU I can sell, I can get some extra asset, intercompany transfers I can do, so that I can do. But what is acceptable at that point of time? If I say that no sir, I have already done A and there is A no more impairment, I have done at a CGU level, I got extra impairment, but my CGU B got finished, then this I will ignore it. Because it's not an accounting entry, like it's funny an accounting entry what you pass. It's a measurement, no. What you're doing is all measurement now. Accounting entry is predefined. Brahma has written previously only. What is the accounting entry? Impairment or cost account debit. 2 goodwill, 2 A, 2 B, done. Now what amount? That is a subject matter of argument. Subject matter of perception. But the impairment 2 goodwill, 2 A, 2 B, Ind AS only told you. Followed, no? Yes, next is the revised, okay, we'll write this note, then we'll write the revised depreciation. Can you tell me the revised depreciation of A? They asked to know how much is for A and B. How much is revised depreciation for A? 90? 930. This number? No, I'm asking, I want an opinion from all the people. Yes, here, what is your numbers? Okay, I can show, click. Everyone okay? Yes, Shruti, you seems not to be convinced. Yeah, Kriti. Okay, first of all, let me calculate. What is my book value before impairment? 418, after impairment 650. Do you have any scrap value? Oh, that vanished, huh? It vanished. Or did they tell you that after impairment, before impairment there was some scrap value available, after impairment that scrap value was not there? Alright. What effect on impairment, no? Gone. Subsequently everything gone, Baba. See, it has got a cascading effect now. For reversal now they will ask you next year. If you small step you miss here, next thing is gone for a toss. So it is 87,930. Your 50,000 also will get distributed for 5 years. Beautiful, right? I love it. Okay, what is B? Now you tell me. See, the probability that you will do correctly is very high now. Because you should also want to be considerate, no? Because 2 marks would have been allotted to this. If you miss this, subsequently they may not give you any mark. But in this step they want to give you 1 mark. Okay, what is my depreciation of B? Revised depreciation of B. $44,336. Yes, Vindhya, what number you got? Yes, here. 1,50,000. Okay, what is my book value of B after impairment? 3,10,000. Does it have any scrap value? No. How many life? 7. No. 2 years elder brother, no, of A. He is the smaller elder brother. 44,336. Yes, we are done with the second part of the question. Now we have to calculate the third one. What is the third one? What is the question they asked you? Carrying value of the CGU. Okay, so for this we have to check for the impairment reversals are there or not. That's why 11 lakh gives me an indication. Maybe in the examination they will give you more clarity. So first prepare working note number 5. Calculation of closing book value on 31st March 2019. How much is goodwill at the end of the year? 0. Machine A, see, this is when I am talking at the end of 31st March 2019. Did anything happen on 31st March 2018? Did you pass the accounting entries for that? Now after those entries, now at the end of the first year, what is my book value? 401,720. Perfect. How did you get 489,650 minus 87,930? That 1 year depreciation. B. Okay, I don't ask you because since you told me first correctly, I will assume that second also should be proper. 44,336. 2,66,014. Am I done? Inventory stock who took then? Inventory is how much? Same, 2 lakh. You assume that to be same. No, they are not sold. No, it's still there. Or you maintain the same level of inventory. Alternatively, you can assume that. No? So your book value came 8,67,734. What is your recoverable amount on this day? Yes. Now we have to calculate. If we are looking for reversal, then we need would be carrying amount. This is my normal carrying amount. Sorry? 11 lakhs is to, now we write note. See, now we calculated the book value. What is your CGU's book value as a whole? 8,67,000. So since recoverable amount in bracket 11 lakhs is more than carrying amount, which is 8.67, impairment shall be reversed. If you don't calculate this 8.67, how on earth you need to know that impairment will be reversed? If you look at individual items book values there, how do you know that impairment has to be reversed? That's why you find out, okay, taken together what is my book value and taken your recoverable amount, what is the book value, you check, and goodwill, no reversal. Restrict to would be book value. Okay, simple shortcuts I'll write. First, note 1, you need to reverse the impairment. Second, goodwill, no reversal is going to happen. Third, restrict the carrying amount reversal to the would be book value. The moment reversal you talk about, the reversal you can talk about from different ways, like government lifted the restriction. You can say, since the government has lifted the restriction, is an indicator that there is a reversal. Working note 1 would be carrying amount. Or this book value is more than the recoverable amount is more than this. That's why we have to reverse this. If you see, I maintain the same format everywhere. Now what I need to do after writing this theory, I need that would be carrying amount. I need the would be carrying amount. Of whom? CGU. No? Okay, A and CGU. Okay, so write working note number 6 would be carrying amount. So I'll have got stock, machine A, machine B. A, B and stock. I will go to the cost, historic cost. How much? 10 lakhs, 5 lakhs, 2 lakhs. Yeah, you need not show it also. Okay, but let us see, let us keep it. Less depreciation for how many years? Okay, can you tell me how much is the depreciation would have come here? Tell me the amount. Huh? Amount, I want the amount of depreciation. See, we are calculating would be carrying amount, and by this point of time, I hope you have understood it. 5 lakh 70. Yes, very good. So I expect, okay, what is my next one? It is 10 minus 0.50 divided by 10 years into 6 years. How much is for B? 5 by 10 into 5 lakhs cost. 10 years is the life, no scrap value, into 2 year elder, no, 4. Because you purchased in 2013. So it is 2 lakhs. Stock nothing. So I have got lakh, 4 lakh 30, 3 lakh, 2 lakh. Now what is your recoverable amount? Because at the individual machine level, I will take whichever is low there. Recoverable amount is 4 lakh 50 for A. A and B together how much? So 7 lakh 60 minus 4 lakh 50, is it going to give me 3 lakh 10? And stock, okay, in fact we can ignore this stock column also, 2 lakh only. So what would have been my would be carrying amount for A? 4 lakh 30. What would have been my would be carrying amount of B? 3 lakh and 2 lakh. Because at the individual stock level, we see that it's already, my would be carrying amount is more than its recoverable amount. Okay, this is simply to confuse you, this particular thing. And this total is that nothing but the total of the CGU would be carrying. Okay, to tell you students, okay, maybe so you can treat it like this. Up to here is what we used to calculate. Then this is actually second working note, whichever is higher or fair value, or fair value usually I didn't give, you know. So the lower of this we have done in this working note only. Okay, so if you want confused, I will change this. You see, okay, this is my would be carrying amount. I am done. In fact, I can take this to the next working sheet. You tell me which, are you okay with this or the next one? So what I have done, what you would have done in the next step, I showed here only comparison and say taken whichever is lower. Alternately, I could have restricted this working note up to here, and that comparison, no, revised book value, this portion I should have done in the next working note. Next working note, what I did, impairment reversal, actual amount 8,67,000, working note 5. Revised carrying amount, you added these 3 columns and 9,30,000. So this is my reversal. Have you understood this? If this was not the case, for reversal also I need to add a column there. Why? Because this total I should have compared with this, no. Again I had to add 3 columns there. If you restrict up to only working up to here. So what I have done? Individually what I need to compare in the next step, that I have compared here. Next step I had only 1 column where I say, look, as on 31st March 2019, what is my book value of the CGU as a whole? 8,67,000. Now, what will be my revised book value? Should have been my revised book value 1. Would be carrying amount or recoverable amount, whichever is low at individual stock, individual machine level. It's total. High probable, question may come as it is. Because now by doing this only, you must be seeing some complexity. So much is there. So practice this properly. So what is my, okay, we have done all the working note. So last thing, question number 3. What is my book value? Book value is equal to, can you tell me students, anyone? Book value of the CGU on 31st March 2019. What they asked? Book value of the CGU they asked, or book value of the individual items they asked? CGU. What is my book value of the CGU? 9 lakh? Very good. In the bracket you can write 8.67 plus 0.62. Now again you please go through and see, do you have any doubts or confusions? But nice question, no? Yeah, it will come for big marks. If it comes for small marks, no, don't touch it. At least how much marks do you expect for this much of, see again, that should happen like everywhere. No? Tomorrow you are into practice. Somebody will come and say, do an audit for me. They will ask you, sir, how much you will quote? What you will say? Let me see how much effort is there, then I will quote. First only without understanding the effort, if you have quoted, then you got stuck there in that audit. Because efforts are more than what your compensation you are going to get. That's why, how much marks do you expect me? 10 minimum. If 10 marks, at least 8 marks, okay. Try to do something fast there. But less than 10 marks if it comes, don't touch this question. 12 marks, 14 marks, wow, fantastic. 14 marks, I don't think so. I reasonably expect 10 to 12 marks this question should come for. Okay, are you clear? We are done with this impairment reversal also.